HDFC Mutual Fund has come up with a new fund offer, that is NFO, for a sectoral mutual fund. The name of this fund is HDFC Manufacturing Fund. In this video, we'll understand the importance of the manufacturing sector, its importance in India's economy, what the performance expected for this sector is, and also discuss about the salient features of this new mutual fund. We are confident that this information will help investors about this new fund's objective and its future potential. Most of the information for this fund has been taken from the new fund offering document and its presentation. Please watch this video till the end. In case you are interested in content like this, please subscribe to WealthAbhi. In a recent report released in late October 2023, S&P had said that India's economy will more than double to $7.3 trillion by 2030 from $3.5 trillion in 2022. This is a significant growth projection. The growth in manufacturing may be even higher. If we see the historic data, we can see that manufacturing often had been the driving force behind the growth of emerging economies. You can see this from the chart. UBS research has predicted that manufacturing share in Indian economy may increase to 20% by 2030 when Indian economy may reach $7 trillion. The role of manufacturing is very important in any country's economy. It brings holistic growth to the economy, which will bring inclusive growth to all sections of the population. The growth also becomes sustainable as it provides large-scale employment. This large-scale employment brings in economic stability in income. This holistic growth and large-scale employment brings in macroeconomic stability to India's economy. China saw a similar journey when its share of manufacturing in economy increased from 9% to 32%. This helped China utilize its demographic dividend. It also helped China move from low-income country to upper middle-income country by increasing not only GDP but also GDP per capita. For India, there is a convergence of several factors which will lead to manufacturing boom. The first factor is opportunity, both internal and external. Internally, India has a large consumer base. Externally, India is looking for huge export opportunities, especially driven by China Plus One policy. In the post-COVID era, all the countries are focusing on import risk mitigation by reducing their dependence on China. The second factor is capability. India has a large number of skilled labor force as well as low cost of labor. Both this as well as improved logistical infrastructure and advanced service ecosystem help in keeping the production cost lower. The third factor is the favorable environment by direct government benefits through several schemes as well as favorable macroeconomic stability over several decades. With all these factors, India is now poised to take a leap in the manufacturing sector. In this scenario, HDFC Mutual Fund has brought in an NFO focusing on the manufacturing sector. This is a broad sector with about 691 companies. This is only considering those companies where the market capitalization is 1,000 crore rupees or more. This sector covers diverse stocks with 55% large cap, 22% mid cap, and 23% small cap funds. Thus, this is a highly diverse sector. Let's now discuss the investment philosophy of this fund as indicated by HDFC in its presentation. The core of this portfolio, that is, at least 80% will be invested in stocks that represent the diverse sector of manufacturing. Stock selection will be based on the research ideas from the HDFC Fund House. The focus will remain on the companies with long runway of growth. We expect that this will follow HDFC Fund's philosophy of finding value funds. As the entire sector is spread out between large cap, mid cap, and small cap stocks, the fund will maintain flexibility to select the stocks based on its core philosophy. The fund will also ensure that the portfolio remains diverse, ensuring less concentration. The fund may also have exposure to other asset classes like equity derivatives, REITs and invitees, debt instrument, as well as other mutual funds with a maximum asset allocation of 20%. HDFC Manufacturing Fund is benchmarked against Nifty Manufacturing Index. Both the benchmark and the fund are considered as very high risk category as per Riskometer. The fund is presently open for NFO and will be open for subscription till 10th May 2024. For lump sum, the minimum investment amount is 100 rupees with additional investment of any amount. For SIP, the minimum investment amount is 100 rupees with a minimum of 6 installments. Now, the question is, who should invest in this fund? Let's hear it from the fund manager of HDFC Manufacturing Fund, Mr. Rakesh Sethia.
Anybody who wants to take exposure to manufacturing, it's an ideal fit for them. Anybody who wants to have a long-term buy and hold strategy, it's a good fit for them. And anybody who, this is a multi-decade theme. It is a good product to do even an SIP from a long-term perspective.
Investors should also be aware that mutual funds are always subject to market cycles and hence the return cannot be guaranteed. Any potential investor should not consider this as an investment advice. They should consult their advisor before subscribing to this mutual fund. They should also refer to the scheme information document. However, if the investor is looking for long-term capital appreciation, this fund may bring rewards. Hope you found this video informative. If you like this video, please don't forget to like it and subscribe to our channel. Also, press the bell icon to be notified of our future uploads.